Hi, good morning everyone. So I welcome you all to the part 2 of the GST Marathon. Now, just if I'm audible and visible, just please put it in the chat box. Give me 1 minute. Uh, Okay. So, hi, good morning everyone. I thank you first of all for your patience. We will be starting with the GST Marathon Part 2. Now, this marathon will be a fast-paced marathon where I plan to cover the entire syllabus of CGST, including the past exam questions. So no doubt this will be a little fast. So for a student who has already studied a little bit before, it'll be very easy. It will be it'll be a easy cakewalk. Second, if a person has absolutely no knowledge about the marathon, what you all can do is about GST, you all can take a book and pen and note it down. Any doubts that come in, I will take up your doubts towards the end of the lecture. Okay, so towards the end of the lecture, whatever doubts you all have, I will be answering that one. And next, I have also provided to all the students access to the dream batch. Okay, the dream batch, if you see the link, the course link is given in the description of this video. For old syllabus is there and the new syllabus is there. There you can go in and look at the lectures. Every single section has been properly done with the in-depth subsection also. The validity will be till your exam date, and there is a nominal amount of rupees 99 only. So it's a big huge gift. Your job is to avail it and also inform your friends. This marathon, which I'll be starting, will be extremely fast paced. Okay, so you just pay attention. I want to cover more thing rather than take one thing and go in extreme, explaining everything. I will talk about everything which is important. Every single important topic will be covered. Okay, so I will not go too much into the explanation. So can we start? Yes or no? I need GTG in the chat box. Okay, first of all, thank you so much. Okay, now please tell me whether I'm audible, visible, and we are good to go. So all your distractions aside, I need your 2 hours and I will finish your entire GST. That is my target. I want to cover more stuff today anyhow. Okay, great. Tilipan, great. Okay, Usha, great. Let's go. Akshaya, great. Okay, Shubh, Rohit, good. Okay, so now, and just before we start, hit the like button, show your attendance, create a positive environment, and we begin. Hi, so now we'll be starting with the second part of the marathon from section 16 onwards. Now, section 16 to section 21 talks about a very important, a short exam question, which is about ITC, input tax credit. Input tax credit in the exam has a definite minimum weightage. Minimum 5 to 10 marks has to come in your exam. So very rarely you will see that they have asked only for 5 marks, but on an average the paper they will ask you for minimum 10 marks. I am going to cover everything. So all your exam questions you will be able to attempt provided you listen to my lecture. It will be fast paced. So take a book and pen and sit with me. First, let's understand what is the meaning of the term input tax credit. So let's break it down. It is a input tax credit. So how do you define it? So first of all, input means what? It is your purchases. So all the tax paid, okay, paid on purchases are credited. A credit has been given of the taxes you have paid earlier. Very simple. So we will also understand with the help of an example, and I will tell you the different types of ITC also. So let's say if I am a car manufacturer, I am manufacturing this car. Now can you all put in the chat box, I am testing your knowledge of GST. In practical scenario, what is the GST on cars? What is the GST? The same rate is there for GST on bikes also. Today, if you're going to buy a car or a particular bike, what is the rate of GST that is there? Can you tell me? Make a guess. I'll be reading in the chat box what it is there. Okay. So this is what is happening is whenever you're going to sell, someone is selling the car, on the sale of the car, how much percent GST is levied? I'm asking all of you all, I want you to put in the chat box. 18% everybody is saying. Answer is actually it is 28%. Government has now increased the rate from 18 to 28%. So let's say if I am purchasing a car of let's say 10 lakh rupees, then on this car there will be a GST at the rate 28%. Okay, this is the rate, you can check it out also. Therefore the total cost for the car will come up to how much? So this will be 2,80,000. So this will be 12,80,000. Concept clear? Yes. So sir, this is the tax that we have taken. The seller, when he sells a car of 10 lakhs, he will collect from the buyer 2,80,000, 28%. This is called as a output tax. This is called as a output tax. Simply it is nothing but a tax on sales. So whenever we sell, the tax that is collected from the customer is called as output tax. Now when the company is there, the car company, they have collected 2,80,000. Will the company, the car manufacturer or the car dealer, will they pay the full 28 lakh to the government? They will tell the government, listen, yes, we have collected 28 lakhs, 2,80,000, but we have already paid a lot of taxes at the time of manufacture. That is all called as input tax. So my output tax on sales, no doubt, is 2,80,000. But while manufacturing the car, while purchasing the raw materials, my input tax was 1 lakh. So I have already paid the 1 lakh at the time of manufacture, or at the time of, to make the sale possible, I've already paid. So now I only have to pay the net GST payable will be how much? Will be how much? 1,80,000. So right now we will only have to pay the government 1,80,000. This what I have shown you. I have shown you is nothing but input tax credit. What is input tax credit? The dealer has taken a credit of the tax that he has paid earlier. Clear? He has paid. So government actually gets 1 lakh before and 1 lakh 80 now. Concept clear? Yes or no? Now types of ITC. Do you all know how many types of input tax credit are there? Okay, how many types of input tax credit are there? So there are in total 3 types of input tax credit. So ITC can be taken of 3 things. So in the car manufacturing, first thing is I must have purchased raw materials such as tires, steel, all of those. So I must have paid tax on the raw materials, that is called as input tax. Then to manufacture the car also I must have imported some machinery which is a capital goods, so I have also paid taxes on the capital goods, so I will also take a credit of those taxes. And I must have hired engineers, lawyers, consultant, architects. I must have done marketing, so there is a lot of service also that I have taken, for which I have already paid a lot of service tax. So all these taxes can be allowed as credit. So you get of input, you get of service, input service, and you get of capital goods. All these ITC can be claimed. Concept clear? Yes. So it is very good for businesses. Businesses, what is happening is the business owner is thinking, listen, when I sell the car, I will collect from the customer. So whatever I collect, it is fine, I'll keep it. But from here, whatever taxes I have paid earlier, I will deduct it, and balance only I will pay the government. Okay. So this concept is called as input tax credit. Clear? So all the tax on purchases. So purchase of raw materials, purchase of services, purchases of capital goods. Okay. Now, so simply if you have to calculate in very simple terms, how do you calculate the GST? So you take the output tax, how much you've collected from the customer. So let's say if I've collected this much from the customer, then I will find out how much I have paid earlier on my raw materials, on my services, on my capital goods. I will take a credit or a set off of it, and balance only I will pay to the government. Now, no doubt this is a simplified example. We will see the real working also in some time. Now, your input tax is extremely important from a business point of view. So as a business owner or a business dealer, for a business dealer, ITC is the most important. Why like this? Because you get a credit. Now imagine if you get a credit of anything, your liability was 5 lakhs, but you're getting credit of 3 lakhs, how happy you will be. So that credit is very, very important. It gives a financial benefit to the dealer. So they have to ensure, to get this financial benefit, some conditions have to be fulfilled. Those eligibility and conditions are given in section number 16. Only if you fulfill the conditions, only then you can get a credit. Because if the credit gets disallowed, the dealer will become mad. So he will say that whatever is given in section 16, subsection, subclause, read everything. I want my credit. I have to get this credit. So what all is there? We will see each section and subsection. Very first thing is, in order to claim the credits, you need to be a registered person. So every registered dealer shall be entitled to take a input tax credit. For example, if I am not registered, can I take a credit of my tax paid earlier? Yes or no? I want in the chat box. If I am a unregistered dealer, whether he can claim credit or no. Can a unregistered dealer claim credit? I want you all to use your fingers and keep typing. Okay, take a book, pen, write it down. Section 16 we are doing now. 16 subsection 1. Quickly, I'm reading in the chat box. I need alive people. Okay, and that is it. Okay, so the more the participation, the better. Very, very good. Perfect. So the answer is you cannot claim credit. Simple. Section 16 subsection 1 done. Moving ahead to subsection 2. Subsection 2 talks about certain conditions which is also extremely important. Now section 16 subsection 2 has 4 subsections, subclauses A, B, C, D. They have also added A and all that, we will see. Now A, he should be in possession of a tax invoice. Let's come here. Sir, what are you saying? Okay. So first point I have already completed. 16.1, he has to be a registered person. Subsection 2, A, B, C, D, very, very important. It says that, listen, if I am saying that I want to take a credit of 2 lakh rupees. So government will say, show me the purchase invoice, show me that you purchased the raw material, show me that you purchased the capital goods. I say the invoice now of that goods that I have bought, I have lost it. I cannot find my purchases document. So government is saying, listen, if you don't have documents, if you are not in possession of a purchase invoice, credit will be disallowed. So in reverse order, in order to claim ITC, in order to claim input tax credit, I have to be a registered person. I should preserve my invoices also. I should have received the goods and services. For example, I am a dealer. Okay. Now I make a certain payment. Now I want to claim credit. So anyone who is wanting, the business dealer wants to claim a credit of 2 lakh rupees. So the goods and service should have been received by the customer. Next, tax should have been paid to the government, because if tax is not paid to the government, then why will we give credit? If 2 lakh rupees you have paid earlier but we have not received, the government only has not received, so it will not be allowed, and you have to file proper return. 4 conditions clear, actually 5 if you go to see 1 and 2. Registered person, you should have a possession of the tax invoices, you should have received the goods, the customer should have received the goods and services, actually physically receive the goods and services. Next, the whatever tax that you have paid, it should be reached to the government. For example, I say that, listen, I have purchased certain raw materials, I have paid to the dealer. The dealer has not deposited in the government, to the government. So then I will be disallowed, because ultimately whoever you pay to, they should ultimately end up depositing it to the government. If they don't do, then I will get disallowed. So government has kept like a self-policing system, where if one is not paying, then even I get disallowed. If this guy doesn't pay to the government, even I get disallowed. So this, I will only tell him that you pay, otherwise I am losing credit. So they create fights between the dealers, and instead of government coming, administering everything, they made it that one you disallow, now he will only ensure that the other one pays. So the the dealer must have paid for the raw materials to the supplier. This supplier, I'll tell him, chalo, you paid back to the government, let it show it in your, reflect in your returns. Only then I can claim the credit. That is there. And lastly, whatever returns are required needs to be filed. Is this clear in the chat box? Yes or no? I want you all to put clear in the chat box. Okay, if it is clear, I want you all to put clear in the chat box so I can move ahead. Okay. So since I'm going fast, I need you all to keep participating by saying yes, it is clear, so I can quickly move ahead. Okay. Now coming to the next thing, we move ahead to another important topic called section, which is about ITC on goods received in lots. They have asked it multiple times in the exam, and it is super simple. It is super simple, and government has asked, the ICSI has asked this multiple times. What is it? Let's see. If goods are received in lots, let's say I have ordered 1 lakh units. Goods are coming, 1 lot is coming, then I have ordered for 5 lakh units. 1 lakh is coming. So only on receipt of the last lot I can claim the credit. Why? Because if you read section 16, subsection 2, it was said that goods should be received. Here, since it is in lots, all the goods are not received. So why we are saying that you will get credit on the last lot? Because all the goods should have been received by the customer. So what is happening is I want to claim the credit, but the customer should have received all the goods. On receipt of the last lot, I will be able to claim the goods. Where goods against an invoice are received in lots, then the registered person can claim credit upon the receipt of on receipt of the last lot. So they had given an example also. It's very simple that there was a registered manufacturer, okay, entered into a contract with a supplier for supply of input X. As per the contract, it was agreed that 10,000 kgs of input will be supplied for rupees this much, inclusive of this much GST in 4 lots. So now this GST which is there, okay, we are making the payment and now we want to claim a credit of this. So invoice of rupees this has been issued. Following is the details of the lots. So now the question is that when can we claim the credit? So on the receipt of the last lot, the 4th lot was received here. So then we will say that you have received all the goods and now you can claim all your taxes which are paid earlier. Clear till here? Yes or no? I want in the chat box. Clear, so I will move ahead. Now another important thing I want to tell is two benefits cannot be taken. Either you take benefit of depreciation or you take benefit of ITC. So very simple, either pay attention. If I am calling for capital goods, I have called for capital goods. In the balance sheet, I can even apply depreciation on the capital goods. So if I apply for depreciation, I cannot apply for, I cannot claim credit on the capital goods also. So I have to choose. Either I go for, if I claim, so again, very simple. All the goods which I have bought, I'm going to claim a input tax credit. So it is a very big benefit. You get all the taxes that you have paid, you get a refund of it, you get to adjust it, you get a credit of it. So if I claim ITC, then depreciation cannot be claimed, or vice versa. So any one can be claimed. If I start applying depreciation and get tax benefits on depreciation, then I cannot claim input tax credit on those particular goods. Is this concept also clear? Yes or no? Okay, is this also clear? Now coming to one interesting thing, where you have to remember this date. They have asked this also in the exam. Now see, I am focusing on things which come in the exam. Now there might be multiple more lines, etc. But I am focusing only on things which come in the exam. And then we'll solve the exam questions also. Now one point is time limit for claiming the input tax credit. Sir, by when I have to claim the ITC? Now before you get into understanding time limit, understand what is the meaning of availing. Availing simply means that I have to upload the details of the invoices within a certain time into the GST portal. So every dealer, just like you have your Facebook account, you have your Instagram ID, businesses have their GST account of the business. So when they have purchased certain goods, they will immediately have to put up the details in the GST account. That listen, I have purchased so much, I have paid so much GST, so in future I can claim a credit. Benefit I will take of this because all these taxes I have paid. So I'll maintain a record. But these details and recording has to be done within a certain time. The government has given the timeline that after this date, if you don't put up, then you will not get any ITC. So let's take an example. I bought certain raw materials. I paid GST on those raw materials. So all those ITCs, input tax, which is I have paid, all these details I have to put it into the GST portal. This is called as availing ITC. Once I put it into the system, then I can avail, I can actually use my credits whenever I want. There is no timing on when you can use the credit. Unlimited period, forever it will be there in my portal. But by when I have to put, so then they have given a date. After, so it has to be done, this is the maximum date, okay? so a registered person shall not be entitled to claim the credits after 30th November of the following year, following the end of the financial year, or the relevant annual return, whichever is earlier. 30th September or annual return, whichever is earlier. So whenever I file the return for 30th November or annual return, whichever is earlier. So in simple words, the time limit for claiming the ITC in respect of the invoice is 30th November of the next financial year or date of filing annual return, whichever is earlier. So once I have filed the annual return, okay, or I have filed the 30th November, moment the financial year is ended 30th November, if within this much time I have not uploaded the details, then I cannot claim my ITC. So for example, if I have made, now pay attention to what I'm saying, this is the financial year from 1st April to 31st March. Okay, let's say we are taking from this 2024 to 2025. So whenever I have made a purchase in this month, in this year, I made a purchase, I have a purchase invoice. So now I am asking you, by when I have to put the details in the GST portal. So you will say it should be earlier of 30th November next year, that is 2025. Okay, from the financial year ending, that is 31st March, from that whichever November comes, or annual return whenever you filed. So annual return, if I filed in October, so that will be the last date. Or if annual return I'm filing in December, then November will be the last date, earlier of these two dates. Concept clear? Yes, very very important. Take a screenshot. Okay, and if you want in depth, very slowly explanation, because sometimes some people might be doing all this for first time, then go in the dream batch given in description. Everything is beautifully explained with examples. Okay, here I am trying to cover more stuff. So we are done with section 16. Now we'll do section 17. Okay, now we are going and doing section 17. Now till here everything is clear, yes or no? I want in the chat box yes or no. Is everything clear? Okay, I want in the chat box clear or not clear. Then I will go to the next thing. So today I planned, I'm really I just want to finish everything. So that's my objective for today, finishing more stuff for all of you all, and all the important points I want to cover. So I'm waiting for you all to put in the chat box clear or not clear, so I can quickly move ahead. So please participative, please. What is the due date for filing the annual return? It is any time before 31st December. Okay, 31st December. That also we will come when we are doing it. Okay, now let's start with apportionment of credit and block credits. Now this is which section? Section number 17. Book and pen should be ready with you, and you should write down all the sections. So section 17 subsection 1 to subsection 4 talks about apportionment. Okay, and subsection 5 talks about block credits. Block credits. Sir, can you explain what is this? Yes, I will explain. Now pay attention. That apportionment means to divide, means to segregate, So we will segregate something with something else. So I will show you what all we are segregating. Always we are saying, see, listen, these are, if for example you have bought goods you have used for business purpose, some you have not used for not business purpose, then ITC will it be allowed? Apportionment means what? To proportionate, distribution. So what is it? I'll explain in short, pay attention. If I have purchased raw materials, obviously I can claim credit of it, but later I come to know that this guy did not use it for business purpose, he used only half for business purpose. So then we will also say that only for half credit you will get. So if I've used for business and I've used for not business purpose, for which I will get credit? For business purpose, I will get credit. Second, if I have got raw materials, then I decided to use it for, taxable purpose, taxable goods, and I started using for non-taxable goods. So they are saying that if goods were only not taxed, then why will we give you credit? So only how much ever raw materials were applied for taxable goods, for selling taxable goods, those will be taken. Then one more thing that they have put in, business taxable, exempt, and so on. Okay, so this is a very simple little point that divided that how much ever you used it for business purpose, taxable purpose you will allow, and what has not been used for business, which has been used for personal purpose, which has not been used for selling exempt goods, for all those, that much amount credit will not be allowed. This is called as proportionment. This is only what they will keep writing. Now block credits, very very important. There will be a table, whichever book you're studying from, you will see a table. Now block credits are very very important. This is actually a negative list. This is a negative list, and if it falls in this list, credits are blocked. That means no ITC is available. No ITC is available. So when I tell you that goods have been lost, destroyed, or stolen, I had bought the goods, I had paid GST, but ultimately I could not sell because it was stolen. So government will say no ITC, because only when you sell, then you collect, then we will allow you a credit. Second, if I tell you that they have given you certain automobile, motor vehicles, and all those list has been given, that has to be studied in depth. A question from there is certain. Okay, so let's start. First is when they've said it is goods have been used little bit for business purpose, some have been used for non-business purpose. So only which has been used for business purpose, only that much amount of credit will be available. Simple. Same point, sir. Goods have been used for raw materials were bought, tax was paid. However, from these raw materials were used for making taxable goods and were made use for non-taxable goods. So then government will say, listen, whatever is there for taxable, credit will be available for that. This is called as apportionment. Okay. Now coming to one subsection 4, very 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 important, and they ask in the exam. Now this is specifically for banking companies. Subsection 4 is specifically for banking companies. What they say, that banks by default engage themselves in giving taxable as well as non-taxable service. Taxable is credit card, or merchant banking service, or they give services of foreign exchange. So bank gives a lot of new transactions have started to come where bank gives services which are taxable under GST. So bank gives taxable services, and bank also gives some services for which there is no GST. For example, bank gives you your FD services. They keep money, they give you interest, they allow you to withdraw your money, issue checkbook services. All that is there. Now all those government is saying it is not taxable. So every bank might be giving locker facility. Locker facility is chargeable. Every bank must be giving you a saving account, so but that is not chargeable under GST. So every bank by default gives taxable as well as non-taxable. So banks have two options. Either they can follow the above rule, that how much ever is for taxable and how much ever is for non-taxable. So how much ever is for taxable, they will have to maintain books of account, proportionate recording has to be done, that how much it was used for taxable and this much it will be allowed. And whatever was for non-taxable purpose, how much ever taxes were paid for non-taxable, then they will forego it, or they will say, listen, it was non-taxable, so that much amount we will not use. Clear till here? Yes. So very simple. That same logic. If bank is giving non-taxable, so for that much amount you don't take the credit. But how much ever is taxable, output taxes, your services, outward services are taxable, supplies are taxable, then only you are allowed a credit of your inward supplies. Okay, inward purchases. Clear? Or they get a ad hoc rate, they say acha theek hai, where you will sit and maintain everything, you just go for the second rule, and most of the banks go for the second option, and that is why they have given it, that automatically whatever input tax credits they have, we will believe that 50% of them is for taxable and 50% of them is non-taxable, therefore 50% you claim and 50% you outgo. Then you don't have to maintain ekdam extreme amount of bifurcation. So banks by default can avail 50% of the total credits and 50% they will forego. Concept clear? Yes or no? So banks have two options. They can go for, okay, banks have two options. They can go for the second option also, and which is very convenient. By default, they will say how much ever credits we have, 50% we will take the credit, 50% we will let go. Now in this they have one part which is there, one more point which is there, which has come in the past exam question, that if the one concept is done, now there is one more part they have given which I want to explain, that supplies between banks having the same PAN but different registration, full credit is available. So how can one have a same PAN? Must be HDFC Bank of Maharashtra giving service of HDFC Bank of Gujarat. So both will have different GSTN number because they are in different states. But both of them will have only one PAN card, HDFC Bank PAN card. So in such case, what they are saying, when there is a branch service given, one branch giving a service to another branch of the same company, then they are saying that full credit is available, then 50% forgo is not there. Let me explain. That bank in state A and bank in state B, they have same PAN, and supply has been made from state B to state A bank. Now once this is there, then obviously payment must have been made. Let's say there must be a payment with GST, there must be a payment with GST. Okay, so this bank has made a payment, so for them it is a input tax. Yes or no? Because this is just to cater to the customers, they have to do back end lot of advisory work and all of this. So here they are just doing a advisory work, they are taking some services so that they can further do. So this, when this bank is paying this money to the other bank, so this is for their purchases, they must have availed some services from the other bank, so it's an input service tax. So this, if they have paid 1 lakh, for this they can take full credit. So again, input tax credit which is generated from another branch, full credit is available to that bank. So this is a benefit given to them. So section 17 subsection 1 to 4 is over. Now we are seeing section 17.5. 17.5 is very, very interesting and very, very important also. You have to just go through them, everything. Okay. Now pay attention. What am I saying? That whatever is given in the left side of the column, GST is not available on that. So extremely sad thing for a dealer if you're falling in the left thing. In right thing, they are giving you exceptions, some exceptions from here. So GST will be available in these things. ITC will be available in these things. So let's see. If a company is dealing in manufacture of cameras, okay, so let's take a Canon. Okay, Canon is there, so they are in manufacture of DSLR cameras. So you tell me, for making this they must have purchased some lenses, they must have purchased plastic, they must have purchased some kind of straps for the cameras, etc. So credit ITC will be available for all of this. Now because these are all purchases that they are doing to further sell it off, the entire camera. Okay, let me draw a camera. This is a camera, okay, and this is the button of the camera and this is the strap. So Okay, so whatever, this is a camera. Now Canon, whatever purchases they are doing of all these raw materials, they will claim a credit. Business expense, they will claim a credit. Now Canon company is saying that listen, we have also purchased a car in company name, in company name, and paid GST of 28% on the car. This car will be used for directors travel, directors commutation, etc., for any guest, etc. Now you tell me, do you think a credit of this is allowed? Now this is also for business purpose. This is also will be used for business purpose only. Can you take a credit of the car, the taxes that you have paid on the car? Canon. So that they are saying, listen, vehicles and all of that, your product is something different, and this car, we don't want to give a credit of this. So here they are saying motor vehicles will not be allowed. Now, however, they are saying motor vehicles for this not more than 13% including the driver. However, if they buy a bus which is 30-seater bus, so then it doesn't come here, so it is allowed. So GST can be claimed. So if same Canon company vehicle was not allowed for directors use, but they bought a bus, a 30-seater bus, they have bought. So then they are saying, listen, this is allowed. Why? Because we are seeing in the table they have given up to 13 seaters, more than 13 seaters is allowed. Okay. Then they have told that if you are purchasing a car company, a dealership company is purchasing a car to further sell the car, then it is a stock in trade. It will be allowed if it is your this. If it is a business, it is your core business. Ola, Uber, they can claim. Zoom cars, which main objective is transportation, they all can claim. Volvo, their business training school. So motor vehicles, when it will be allowed, when the motor vehicle is actually used as a stock in trade or as a product in the business. So let's say if there is a driving school, they can claim. So all this you will read it. Same thing, vessel, aircraft, someone bought a private jet, director bought a private jet. So this is also disallowed because it is on this side of the column. This all gives you the disallowed section. But here they say all this is allowed. If you have bought a jet to further sell the jet, it is your stock in trade, allowed. If you bought a ship, ship to further sell the ship, allowed. If it is done, the ship or the aircraft has been bought for imparting training for as a flying school, allowed. Then general insurance, repair, maintenance, two motor vehicles and all. So if it was disallowed, motor vehicles, vessel and aircraft were disallowed, then even the expenses on the motor vehicle will be disallowed. Like your insurance, your repairing work on the car will also get disallowed. Now let's say the company has kept a canteen. Now I am asking you questions, okay, because this table is something that you have to read, but I want to see your knowledge, what is there. A company has a canteen and they buy all these raw material, they buy all these food products on which they have paid GST. Can they claim the credit? So so many companies have canteens, right? So in the canteens, they buy the product, na? So they pay GST to the catering, the company pays to the caterers. So can they take a credit of that amount? Yes or no? I want in the chat box. I want you to be alive and active. Okay. So please mention. So just 2 hours and you see I will finish everything for you. No, yes, everybody is giving different answers. Section 17, subsection 5, even after the lecture, you will sit and read through everything, okay? Again, one is saying no, one is saying yes. Let's see, everyone read it, it is in front of you. And tell me, exam it has come so many times. Okay? Waiting for you all to chat, okay? So, very good. So the point is, it will not be allowed. So if it is in this side, it is in the negative list. If it is here, it is allowed. So food, beverages, outdoor catering, beauty treatment, health, cosmetic, plastic surgery, all which you have done for the employees, credit of this cannot be claimed. This side you will see that if it is my business of catering, if it is my business of beauty treatment, if it is I'm a plastic surgeon, so then credit can be taken. One. Second is if any of this has been obligated by an act, that Factories Act has already put that if there are more than 250 workers, you have to mandatorily do. So if law has told me to do, then I can take the credit of it. Okay, very simple. Then the company also has a gym, spa, fitness center, and they are paying. The company is paying for it. So can they claim a credit of the GST? Answer is no. Sir, it came on this side. So just look, I'll read through the headings. With health, fitness, all this is not allowed. Travel benefits. I have given the employee, go, you can travel for the entire, your best employee of the year, go and take a trip. Now I have booked his flight tickets, I have booked the stay, I have booked his sightseeing, I have booked the videography, I have booked for his, skydiving. All of that we have paid, and all of that are chargeable under GST. But we cannot take a credit. Okay, this all has been specifically given in the negative list. Clear? So ITC of all these things cannot be claimed. However, government has made it obligatory, then it will be permitted. Same thing, works contract services, GST is not available. Unless you are in the business of works contract, you take work contract service to further give work contract service. So then that will be allowed. Now one very important line is other than plant and machinery. So if it comes here, means it is disallowed. Sir, what do you mean by works contract? Works contract means you've taken one work to complete it. For example, repairing of lift, I have taken one contract to complete this. So that they are saying is not allowed. But if it is to install plant and machinery, so it becomes like a direct thing which will be used in the goods and for making the sale possible in the course of business, because plant and machinery is directly used into the business. So if it is a work contract for plant and machinery, it will be allowed. So works contract for installation of plant and machinery, it is allowed. Concept clear? Yes or no? Yes sir, very simple, hardly anything is there. Again, construction of immovable property. Okay, goods used for construction of immovable property. So there is a real estate company, Ludas, or there is Shapurji Palanji. Tell me in the chat box, in your area, wherever you live, who is a famous builder? Give me a name of certain builders. Where I live in Bombay, Lodha is among the top builders. Then there is Piramal Reality. Then there is Rustamji. These are the top builders. Hiranandani, extremely big builders. Now, when these builders are building a particular, they are having a society. Whatever raw materials they have used, cement, paint, they cannot claim a credit of this. So real estate, companies have a disadvantage under GST because this is not there. Concept clear? Yes or no? Under composition scheme. Now see, composition scheme, we know that they are disallowed ITC. So obviously it is there. Then all these points are also, if a non-resident taxable, so taxable person also cannot claim, except import of goods by a non-resident taxable person. So non-resident taxable person, so he's not a resident, he bought goods here and he sold goods here, we are not giving him credit. But if he's imported the goods, we are giving him credit. Personal consumption, if you personally consumed it without selling, no ITC available. Very important. Goods lost, stolen, destroyed, written off, not allowed. GST paid as demand raised by revenue authorities, so no ITC under section 74. Very, very scary provision is this, that let's say if a person has not paid GST and GST authorities had issued a demand notice to him, and pursuant to that he has to pay a GST amount, then he will say, listen, I had certain credits. So they say, no, ITC is not available when a demand notice is raised to you. Okay. Now we are done with this section 17 also. Till now I have done section 16, 17 also, beautifully done. and covering everything which is important. Not a single important thing has been left out. Till now, if you've not liked the video, like the video. Okay, and that's it. Now, section number 18 has a particular table which I want you to know. In section 18, there are two things that I want you to know. Only two things, not too much. I want you all to know two things. So, in section 18, I want you all to know two things. Okay, 1 and 2. Can anyone tell me which are those two things? Chalo, you all tell me what is there in that section 18 which is important from exam point of view. Only those in section 18, only these two things comes in the exam. Nothing else comes out, beyond this. Tell me what it is there. What am I talking about? Shripati. Okay, great. Okay. Now you all tell me in section 18 there are two things. What are those two things? It comes in the exam, it has come in the exam, and it is a good probability it will come in your exam also. And once you do these two things, your entire section 18 is done. Sir, and what is section 18? The heading is special circumstances. GST in special circumstances. ITC, GST in special circumstances. Okay. So, very good. Afreen, excellent. I thought you all will not be able to answer this. Okay, Afreen has said it actually. It is rule 42. You open your book, past exam question, you will see section 42 given. Okay, section 42 given. And the other one is a table. Which says that if you have changed from taxable to non-taxable, if you were a composition scheme, now you've exceeded the threshold. If you have done compulsory voluntary registration, then what? If you've done your compulsory registration, then when you can claim the credit. So these two things are there. So I have summarized it in a table, and second is section 42, rule 42. Let's do rule 42 and finish it off. So rule 42 is talking about, let's come to rule 42. Sarji, where is rule 42? Okay. Here. Rule number 42. Let's see. So yes, what they are saying that supply of of plant and machinery after use. Now what is happening is plant and machinery I had bought, capital goods I had bought. Credit of that can be claimed, yes or no? Obviously, sir just told in ITC that credit of plant and machinery can be claimed. Capital goods can be claimed, full credit can be taken. So when I bought the plant and machinery, I took full credit. But now, without using it till the life of the product, in between, in 6 months, I want to sell it. So government is saying, wait, you took full credit and now you're not even using it fully. You're not using the entire plant and machinery for its entire life. Then what you do, some reversal you have to do of the credit ITC that you've taken. So how they have put it, listen, that if you are planning to sell the plant and machinery after use, so we'll say, what are you saying? You took full credit, 100% credit you took, and now plant and machinery also you're not using fully, you want to sell. Then listen, the registered dealer has to pay. Sir, how much he has to pay? An amount equal to ITC taken, reduced by 5% per quarter or part thereof, or tax on the transactional value, whichever is higher. So now pay attention. What are we saying? That listen, if you are going to sell your plant and machinery after use, then you have to pay tax. How much? Tax on the transaction value. So let's say there is 18% tax, and the sale value, you sold it in scrap for 1 lakh rupees. So 18,000 you will have to pay. Why? Because tax on transaction value. So how much ever is the deal? If I had purchased the plant and machinery, I took full credit. Now I didn't like the plant and machinery. After 3 months, I want to sell it off. So when I'm selling it off, government is saying, listen, we had given you full credit thinking that you will use it for a long time, but now you want to sell it now only. So then credits taken has to be reversed. So then they'll say pay an amount equal to tax on the transaction value, or the second calculation you have to do is you have to say how much ITC you claimed. So I say I claimed so much ITC, reduced by every quarter that you have used. So for every quarter that I have used, I am allowed 5% deduction. So it is very good. So if I had claimed ITC of 1 lakh, I don't have to reverse the full amount. For the more I use, the lesser I have to pay, the lesser I have to reverse. So 5% will keep reducing. So then if I say I've used for 8 quarters, then 5 into 8, that much amount will be reduced. So then once I do both of this, then I will find which is the higher amount that has to be paid as tax. Concept clear, yes or no? This is rule 42. Concept clear, yes or no? So either first part is very simple, tax on the transaction value. Second part is how much ever ITC is claimed, you will put that, then you will write less 5% into the number of quarters or part thereof used. So 4 quarters, 3 quarters, how much ever it is there, then whatever is this minus this, you find that amount, compare it with this, and then say whichever is higher. Concept clear? Yes or no? Even if you see, yeah, so this is it. Now coming to the second part in the question is the table. Special circumstances. So very simple. What they are saying now, pay attention. If a person was liable from today to get registered, they cross the threshold today. So all the credits available 1 day prior can be taken. So let's say if I cross the threshold today, then from today I have to start paying GST. So then when I start paying GST, I would also want to claim credits. So credits are allowed, all of the credits as what was there yesterday, 1 day prior, whatever was there in the books of accounts, all those credits can be taken. So this is for compulsory registration. For voluntary registration, then 1 day prior to the date of registration, this is 1 day prior to liable to pay tax. Okay, and that is it. So this is, you can read it up, you will come to know, and even you can check it up from the detailed lecture in the dream batch also. So I have explained. Now I'm coming to section 19. Now section 19 is also very, very interesting and very, very easy. Okay, what is it? Let's see. I think my laptop needs a break. So 19 is about job worker. Sir, what do you mean by job worker? So job worker is a person who is appointed by the principal to complete a job. For example, I am the principal, I am a manufacturer. Now manufacturers might want to outsource some of the work, paint work they can outsource, some anything. So they are called as job workers. So principal connects with them to complete a particular process. The job worker completes the job and then returns the goods back to him. Now my question is, if who can claim the credits? Credit will be taken by whom? I have purchased the goods. I've given it to the job worker to complete a process. Credit will be taken by the principal only. The principal has purchased, ownership is of the principal, tax has been paid by the principal. It has just been given to the job worker to complete a process. Either directly it goes to him or comes to me and then I give it to him. Because the goods will return back to me. So government is saying, okay, fine, it is a process. So ITC will be allowed to the principals, and the principal is paying for the goods and the tax also. It is allowed even if the inputs are sold directly to the so I'll tell my supplier, listen, don't give it to me, give it directly to the job worker. He has to complete some initial thing and then he will send me. Payment I will do, GST I will pay, bill I will clear, just give it to him. So even ITC is still, it is allowed to the principal only. But Now pay attention to the catch. I am claiming the credit. Goods have gone to the job worker. Now we would want the job worker should complete the process and give it back to me, because I have already taken the credit. So government will say that there has to be a timeline from when he has to give it to me. So it is very simple, 1 year. So if it is inputs 1 year, if it is capital goods, it will be 3 years. So inputs has to be received back within 1 year. If it is not received, then the principal, whatever tax benefit he has taken, he has to reverse. So he has to give back the credits taken. Then capital goods, same point, that, but the only thing is 3 years. So 3 important points are there. And remember, there is no time limit for molds, dies, jigs, fixtures, tools, etc. So again, for these products, there are no time limit. Normally, what is the time? Now, this is the entire summary of section number 19. Section 19, beautiful summary. Sir, what is it? That, pay attention to the summary, that goods can be sent by the principal to the job worker, whether it be inputs or capital goods. It could be sent directly from the supplier to him, or the supplier can give it to the principal and then it will be given to the job worker. But always the credits will be taken by the principal only, because principal is actually the owner of the goods. Now they are saying that the job worker has to complete the job and return the goods. For inputs within 1 year, for capital goods within 3 years, for molds, dies, jigs and pictures, time limit is not there. Concept over, beautifully, easily, in a fast-paced manner we have completed. This is section number 19. Now we will do section number 20. The another concept is of input service distributor. What is the concept? Input service distributor. Sir, what do you mean by the term input service? Now input service distributor. Let's see. Now, input service distributor is actually an office of the supplier. Now, pay attention to what I'm saying. It's a very, very important concept and many people sometimes they don't know. Okay. So, okay. So, what is it that? Now I'm explaining the concept of input service distributor. First, tell me in the chat box, do you really know what does a ISD is? Who a ISD is? I want to know whether you already know or after my explanation you will come to know. Do you know what is a ISD? Quickly into the chat box, yes or no. What is a input service distributor? Do you know the concept or you don't know? Is all I want to know. Okay, into the chat box, because many times students don't know the concept only. Okay, and it is very common that this concept is not clearly understood. I will explain in very simple words and very fast manner. ISD, yes. Tilipan, great. What about others? Do you know the concept? Then quickly I will be doing the exam sums also once I'm done with all of this. Okay, sure. So mostly people have an idea. So let me explain what is a ISD in fast-paced manner. Okay. So, okay, Monish doesn't know, so I'll explain. So Monish, after I have explained the concept, you have to tell me whether you've understood it or no in the chat box. Okay, later when I complete. Now, who is a ISD? Input Service Distributor. So input service distributor is actually an office of a business. It is an office which will receive input tax on behalf of its units and then distribute the ITC to each such unit. So let's ideally input service distributors are actually head office. See, who is a input service distributor? Pay attention. Now I'll explain. The head office is actually the input service distributor. So why like that? Now let's say if a company has to do an audit. Now audit is done of the full company, yes or no? So audit bill will be given to whom? It will not be given to each branch. It will be given to the head office. let's say if there is a Parley is doing an advertisement, then again that advertisement is for the full company. So when the advertiser will come and give the bill to the head office, head office will have to clear the bill. We won't give it to each individual branch or manufacturing unit, right? Yeah, you will give it to the head office. So here the head office will receive the input tax. They will receive input tax. So when they pay all these, so they will make the payment and they will have all input taxes with them. But head office never sells goods. You will never go to a head office and say, give me this, give me that. They are not into selling. They are just a head office, okay, where decisions are taken, etc. Board of directors are sitting, but they are not selling the goods and services. Actually, the manufacturing units are in Maharashtra, in Gujarat, in Punjab. So now the head office has the input taxes, but these input taxes they have to give it to their branches, to their units. So they will give it and distribute the ITC to the particular units. So they will give it to Maharashtra. Listen, the head office will say, listen, I don't have any sales, so I don't collect any tax. My units do that, so I will give it to the input taxes to Maharashtra, Gujarat and Punjab. But now question comes that how much you will give, because let's say input taxes are 1 lakh. So how much will you give? Will you distribute equally? So then you will say that the credit, the input tax credit is distributed in proportion to the turnover. So if the turnover of Maharashtra is 50%, then 50% of the ITCs are given to them. If they have only 10%, then only 10% of the input tax is given to them. And if this is 40%, then 40% of the credits will be given. So here, in order to do this, the head office has to be registered under a head. Okay, there is a separate registration for declaring themselves to the ISD. That listen, I am a input service distributor, head office. I will be later on distributing all the input taxes among the units on basis of the turnover. Concept clear? I am done. Yes or no? Okay, so this is done. This is all the concept that is required. Have you understood? Okay, quickly. So I am done with the section 20 also. I just need someone who didn't know whether they have understood it, the concept now. So who didn't know? Swarupa didn't know. Monish didn't know. Okay. Okay. So now you all know. Great. Great. Okay. So very good. Now let's go ahead to the other thing. Now we are going to section 22 to 24 is very simple. It is registration, when you have to get registered, etc. Not going into that. It's a very simple provision. You can read it up. Procedure, casual taxable person, etc. I wanted to go into a more detailed thing, but still I'll just take you all through in a really rapid manner. Okay, then I will start. Now see, we are doing section, we did section 20 and 21 is just a penalty, so 21 is also done. Now 22 to 30 is about, 22 to 30 is about registration. Now it says who is liable for registration. So it is turnover based. It gives you a certain turnover threshold. What is the turnover for manufacturers? What is the turnover for goods? Can anyone put in the chat box? Service, I will tell you. If you are a service provider and you exceed 20 lakh rupees turnover, then you have to get yourself registered on the GST. If you are a manufacturer, then what is the limit? Can you even put in the chat box? Quickly, I'm reading it up. Randomly, you all can put. For manufacturer, 40 lakhs. Very good. Okay. Tilipan, actually, it is 20 lakhs only for service provider. For manufacturer, it is 40. Very good. Only goods, it is 40 lakhs. So this is done. Person liable to register, turnover is done. But there are some categories who have compulsory registration irrespective of turnover. Whatever your turnover, you even before starting the business, you have to get yourself registered. So those who are giving interstate goods, then they have given you an entire list of people, e-commerce operators, OIDAR services, a list that you have to remember. Person who is not liable to register, then obviously agriculturist or who is not within the turnover. So this we saw 40 lakhs is there. Then threshold is a little, for some states is different. Section 23 were not required. Now 24 is important. See what is important and comes in the exam, I'll focus on that. Now this you should know the list. Now this list is very simple and very easy to identify if you know the section numbers. Okay, section 51, 52 will come here. 51, section 9 subsection 5, casual taxable person, interstate supplies, those who are required to pay under reverse charge, e-commerce operators. Okay, all these have to mandatorily register under this. So you see this heads, that is it. These have to mandatorily register. Now coming to something called as something important we will do, TDS, TCS and then sums. Very simple. So from here, we'll do TDS. All the others are very, very simple, okay, and very, very short. I want to go into something which comes in the exam. That is why I'm focusing on that, and then I will take you all through the exam questions. Now TDS under GST. Do you know the concept of TDS under GST? So what it happens is, pay attention, who is required to deduct TDS under GST? So it is only government or government departments who are required to deduct TDS. So they are the deductor. When deduction needs to be done, so cutoff date, so whenever the contract value is of 2 lakh greater than 2,50,000. Let's get into the direct concept. I'll tell you. So I'll tell you in short what happens when the government is the recipient. Now pay attention, I'm explaining. Here you have a supplier of goods or service. They have supplied some goods or service to the government department, etc. Now since they have got the service, the government department will pay for the value of the goods and they will pay for GST. Now whenever the transaction value is greater than 2,50,000 rupees, then the government department will also be liable to deduct TDS amount. So since they are giving the money, they will also deduct some amount of TDS. Now how much TDS they will deduct? CGST 1% and 1% SGST. If it is an interstate transaction, then 2% IGST will be deducted. Concept clear? Yes or no? Simple. So why is this TDS done? Moment this TDS is deducted, it creates a trail for the GST department that listen, 2% has come, this balance, this transaction has been recorded, and now we will look at the supplier for paying the balance amount of tax. Now whatever amount, let's say you deducted TDS of rupees 2,000. TDS of 2,000 was deducted, for example. This 2,000 will get reflected and a TDS certificate will be given by the government to the supplier, and this 2,000 can be used by the supplier saying that listen, my 2,000 has already been deducted. So ultimately the supplier doesn't have to pay additional amount. He will get the benefit of 2,000. Then what is the purpose? Is to create a trail of the transaction. And government, with this trail, it's easier to track transactions in the backend. So that is the entire purpose. Have you understood the concept? So the government making a contractual payment of exceeding 2,50,000 has to deduct 2% of the TDS, and whatever TDS is there will be reflected in the cash ledger of the supplier. That is it. So we are done. Now one important thing is they will issue a TDS certificate. The government will give the person that listen, I have already deducted your TDS and I have deposited it. So the time limit to deposit the TDS is up to the 10th of the next month in GSTR 7. So the amount deducted as tax shall be paid to the government by the deductor within 10 days from the end of the month. Moment month ends, within 10 days from the month end, they will pay the whatever deducted amount is there, they will pay it to the department. So the government will deduct it and then they will pay it to the GST department. Clear till here? They will issue a TDS certificate to the person also, to the deductee in GSTR 7A, mentioning contract value, deduction rate, how much it is there. Then later he can use the benefit. Concept clear? Yes or no? Is the concept clear till your TDS? Now we will start the sums element. Now we will start the sums. Very important. Short. So here if you see, I have done a lot of stuff, but all these things come in the exam. Okay. So which were not that much of a importance, I have not gone or not touched upon it. If you want to study the full GST, in the description of the course or dream batch, or even at least tell some of your friends. Now we will start with the sums. Okay, sums. And sums are also very simple, very simple, provided you understand the concept. Okay, now what I'm going to teach you is very important. Till here I want to say everything is clear, yes or no? Till here everything is clear, yes or no? Into the chat box. TDS can be reduced from the income tax payable. See, this is GST, so it will only be connected with GST, not income tax. Why under GST it is coming? So it is there in GST in government pay. It is there GST in it is for income tax is a separate department, separate rules, separate everything. This is a separate thing which is there. Even in TCS concept is there in direct income tax also. It is there in GST also. Okay, yes, sir. E-way bill. Okay, Afreen has said please do e-way bill, credit note and debit note. So I will be doing that in detail. Clear. So there is a request to do e-way bill. I will be doing e-way bill. Don't worry. Okay. So here I have shortlisted e-way bill also here because it comes in the exam, and debit note, credit note I will also do in depth. Okay. So let's start. Now, like you have your Facebook account, you will have your Instagram account. A business owner will have a GST account. Okay. Now these GST account, when he opens, he logs in into the GST portal. He will see three ledgers there. He will see three ledgers. There are three ledgers there. One ledger is a cash ledger where he will deposit cash. The second ledger is your credit ledger. All the taxes that you have paid earlier, input tax, credit of that will be available here. So input tax, whatever taxes you have paid, all those credits will come here. How much credit is available in credit ledger. And liability ledger is your tax on sale, output tax. How much ever taxes you have paid, output tax will come here. Clear? So for example, very simple. Let's say I made a sale. Output tax was of 50,000 and I collected 50,000. I have to deposit 50,000 to the government. I had credit input tax in my credit ledger. I had already 20,000 rupees I had. Now I am short of 30,000 rupees. 50,000 liability, 20,000 I had credit available, so I used it. Now 30,000, so I don't have now. I have to put it into the system, the cash, and I will pay. So here I will add 30,000 in the cash ledger and put it, and then accordingly discharge my liability. So my liability can be paid off with credit and with cash. Concept clear? Yes or no? Concept clear? Yes or no? Now credit, as you know, GST itself. Now pay attention. GST is not only GST. There are different types of GST. Agreed? Which are the different types of GST? IGST, CGST, SGST. Now this table which I am going to teach you is the most important. If you understand it clearly, then your concept is done. Now let me explain. Okay, now let me explain that credit. Okay, credit is something good for you, yes or no? When I say you have a credit balance, or when I say you have a credit note, that means you have money is worth with you, yes or no? So a credit is very very good. We have a credit of that much amount, so we will be happy. Okay. Now whenever I pay taxes, I have credits available. I can take credit of those taxes. So now let's say if I have made I had made purchases intrastate. So intrastate I must have paid SGST and I must have paid CGST. So let's say 25,000 I had paid SGST and 25,000 I had paid CGST, and I had also made an interstate purchase. So I will also have IGST of rupees, for example, 1 lakh. So these are all the credits that I have. Understood till here? So this is very very good. I have these kind of credits available with me. Now when I purchased all this, I made the payments. Now I am selling. So when I will sell, I will have a liability. I will have a liability to pay to the government. Now let's say I made a intrastate sale and I made a interstate sale. So when I made a intrastate sale, I would have collected CGST and SGST. On my sale, I must have collected CGST and SGST. And I also made a interstate sale of IGST. So IGST would be collected. Now when I sold, I collected tax. I collected tax of let's say here 50,000. Here I collected 50,000 and here I collected 2 lakhs. 2 lakh 50,000. So in my liability ledger, I can see this much amount, and in my credit ledger, I can see this much. Now question is that when I have to make a payment of CGST, for example, I want to make a payment of CGST. So I would say, listen, I have a liability of 50, but I also have a credit of 25. So I will take set off accordingly. Now which liability, which credit can be used to pay which liability is important to know, yes or no? So we need to know which credit can be used to pay which liability. It is important. Rules have been given. Let me explain. If I have a pantaloons voucher, if I have a pantaloons credit, can I use this pantaloons credit to pay let's say your Amazon liability, Amazon payment liability? Yes or no? Can I use a pantaloons credit which had gone in pantaloon store, I had returned, made a sales return, got a pantaloon credit? Can I use this pantaloon credit to pay a online payment for Amazon? Answer is no. We have to see that the credit against which this credit is used against which thing. So ideally you will say pantaloon credit you can use to make a pantaloon liability payment. You can adjust that. Okay, so you have to see, some are very good credits which are like a universal credit which can be used against anything you want. So let's see which are those. Till here, are you understanding what I'm saying? What I'm just trying to explain, that you have to see which credit can be used to pay which liability. First, so they have given you the rules that if you have a credit of IGST, it has to be used first to pay IGST liability. So full IGST has to be exhausted. A credit of IGST has to be used to pay IGST liability. Then if balance is left, still I have more credit. Okay, so let's say I had a credit of 2 lakhs and here I had a liability of 50,000. So I can use it to pay my this liability and I will still have 1 lakh 50. Then I can use it to pay my CNS in any order, any proportion. Second, if I have a credit of CGST, I will first utilize to make payment of CGST liability. Pantaloons credit will first be used to pay against Pantaloons liability. Same thing, I will first be used to pay I. C will first be used to use C. Then if balance is left, then you will pay I credit liability. C cannot be used, C voucher cannot be used to pay your SGST liability. And third also, SGST or UTGST can be used to first pay SGST, UTGST liability. Then if balance is left, then you can use to pay IGST. It cannot be used to set off your CGST liability. Okay. So again, if I repeat, now pay attention. And it's very simple, you will understand. So complete utilization of IGST credit is to be done. So IGST should first be utilized. So when I have all these credits available, first I will pick up IGST. IGST credit has to be first picked up, has to be paid with the IGST liability completely. Then if IGST credit is available, then it can be used to pay C or S in any order, any proportion. Next, when using CGST and SGST credit, so CNS will be used to pay IGST. We can start, now pay attention to this, we can start using credit of CNS only when the credit of IGST is fully utilized. Means when I have 3 vouchers, let's say I have 3 vouchers, okay, I have 3 vouchers. Let's take a colorful pen to make you understand. So I have 3 vouchers. One is C, one is S, and one is I. All 3 credits are available. First, I will have to pick up which voucher from these 3, C, S, and I. Which voucher will I first use to start paying off my liabilities? Quickly into the chat box. Which you will use? Very good. So first you will use this to pay, you will use your IGST liability to pay your IGST liability. IGST credit will be taken to first pay IGST liability. Then it will be taken IGST liability. Then you will take it to pay your I will first be used to pay I, then CNS. Then once I credit is completely used, then you will go to CNS. So credit, CGST credit can be used first to pay CGST liability and then to pay IGST liability. So credit of I should first be completely exhausted. Then you will say that listen, I credit is utilized. Now we can use the other credits. Cross utilization between C and S is not allowed. Okay. So again, first voucher that you will pick up is I, will first be utilized. Then you can use C and S. C you can use or S you can use, either of them, whichever you want. So this is the manner of utilization. First IGST credit you have to start, pay off I, then C and S can be used. When we have CGST credit, you will use it to first pay CGST liability, then IGST liability, and so on. Cross utilization is not allowed between C and S. Okay. Now here one very important point I have to tell you, which they have asked in the exam, that cash ledger can be used to pay your penalty or any kind of interest payment. Credit of IS, this cannot be used to pay penalty and interest amount. So whatever penal charges are, they have to be deposited in cash. That is what is important. Okay, credit, you have to remember, that the credit ledger can be used to make payment of tax only. No other amounts such as interest and penalty and fees can be used to pay. So credit, what is this? What are they saying? That the credit of this ledger can be used to pay tax only. No other amount such as interest, penalty, fees can be used. So credit cannot be used to pay your interest, penalty, fees. Very, very important to know. So how will you pay the interest, penalty and fees? You will deposit cash and make the payment. Okay. So now we will see some exam questions and I want you all to participate. So now I'm going to get into the exam questions. I want you all to participate. One dealer has a credit of 5 lakh ITC ledger. Credit of 5 lakhs. Dealer has interest areas of 6 lakhs and penalty is of 2 lakhs. How much he needs to deposit to pay this dues? You all tell me. He has 5 lakhs as credit and he has to pay 6 lakhs and 2 lakhs. So how much he can use his credit? Answer is he cannot use the credit only. Interest and penalty has to be paid in cash. So he has to deposit 8 lakh rupees cash and make the payment. Interest and penalty cannot be used to pay. Cannot be paid with credit ledgers. Okay. Now this thing we'll try. Okay. Now one sum is there. You all have to try. Okay, let's see if you can try and get it. Suppose a dealer has SGST credit of 4 lakhs and at the same time he has a CGST liability. What amount should be deposited in the cash ledger? So dealer has C credit, S credit and a CGST liability. So cross utilization is not allowed. Therefore, he will have to deposit the full 3 lakh rupees and make the payment. Concept clear? Because cross utilization is not allowed. Now next again. Okay. I want you all to try and finish it off. Try. This is an exam question. Okay. This liability thing that they keep asking. Now, suppose one dealer has IGST credit of 4 lakhs in his ledger. At the same time, he has a IGST liability, CGST liability and SGST liability. What the amount should have deposited in the cash ledger to discharge the liability and file the return? So what are we seeing? We are going to see the tax, the output liability, and we are going to see how much credit he has. So how much credit does he has? He has a liability of IGST liability, CGST liability and SGST liability of 2 lakhs, 3 lakhs and 5 lakhs. But credit he has of how much? He has a IGST credit of 4 lakhs. So how he will use? So first he will use this entire credit to utilize payment of IGST liability. So this will be reduced. Now he will have IGST liability of only 2 lakh rupees. This 2 lakhs then he can use to pay off CNS, any order, any proportion. So he can use to pay full CGST liability and 1 lakh he will pay SGST liability, or he can choose to pay 1 lakh here, 1 lakh here, and then this will be the liability that he will have. Concept clear? So IGST is used, then after IGST is used, then CNS can be paid in any order, any proportion. Clear? Now one last question we will do. Okay, so this is the last question. So this is fine. You can check it up. Now we will do something called as e-way bill. E-way bill is also very, very, very important. Every attempt they have asked the exam question. Every attempt they have asked the exam question on e-way bill. So till here, is everything cleared? Yes or no? Into the chat box, is everything clear till here? So then I will then start. E-way bill is also very important. Okay, it has come in the exam. Every time they keep asking in the exam. Okay, so in very quickly we'll finish it off. Let's start. So good to go. Let's start. E-way bill. Now e-way bill, what is it? So e-way bill in simple words is nothing but a transport document. What is it? It is a transport document. Now when this needs to be done, so whenever you're transporting goods exceeding 50,000 rupees, okay, whenever there's a movement of goods exceeding 50,000 rupees, e-way bill is to be made. Okay. Now, moment you go to make a e-way bill, you will go to the CGST site. You will say generate e-way bill. Once you generate a e-way bill, it gives you a unique barcode number. It gives you a bill number. Okay, that is important. Like this, see, e-way bill number you will get. Now e-way bill is actually divided in two parts, as you can see. So e-way bill is divided in two parts. One part gives you details of the supplier, recipient and the goods, and part B gives a detail of the vehicle number. If the vehicle is changed, then the e-way bill has to go ahead and be amended, modified. Clear? So this is fine. Now the question is, sir, when you have to start, when you have to file the e-way bill? So prior to commencement of the journey. So before moving the goods only, you have to go ahead, the person will go ahead and generate the e-way bill. So now whether this is interstate supply or intrastate supply, any of them, you have to generate a e-way bill when it is exceeding 50,000. In some states they have made intrastate to 1 lakh, but right now we have to remember 50,000 rupees. Now e-way bill when the consignment value is exceeding 50,000. So every registered person who causes a movement of goods, whether it is by sale or other than sale, also they have to generate a e-way bill. Sir, other than sale means what? Why would one do other than e-way bill? Sale. Because it could be sales return, it could be on approval basis, it could be job work, it would be anything. So job work, approval, anything it is been given. But if the goods are worth more than 50,000, you have to generate a e-way bill. So is it necessary only when I'm selling I have to create a e-way bill? No. Even when there is a sales return, there is a transportation of goods, basically they are saying. Now, normally we know that e-way bill threshold is what? What is the threshold for e-way bill? 50,000 rupees, okay? But for some types of business, even if it is less than 50,000, still e-way bill has to be generated. So compulsory e-way bill irrespective of the consignment value. So e-way bill is required to be generated mandatorily even if the consignment value is less than 50,000. For whom? For if it is related to job work or handicraft goods. So if it is given for principal to job worker, is mandatory for interstate movement irrespective of the consignment value. So if there is an interstate movement from job worker to principal to job worker or handicraft, then even 1 rupee goods you have to create a e-way bill. Simple. Now comes to the validity of e-way bill. Validity of e-way bill. So now in the exam they have always asked on the question of validity of the e-way bill. Very, very simple. So when I go and prior to commencement of the journey I generate the e-way bill. Now e-way bill has a validity. Within that much time the goods has to reach the destination. So what is that? For every one, it will be valid for 1 day for every 200 kilometers of travel. Sir, what is it? Now pay attention. It's so simple. Let's see. Super simple. Now, what they are saying, we are trying to understand the validity of the e-way bill. Now, it depends on the type of conveyance. It could be a normal cargo, which is the most important, for which we have to know, and the other one is over-dimensional cargo. Over-dimensional cargo, which has like multiple wheels, which you see. Those long, which you see on the highway, these are the multi-dimensional cargos. So, a multi-dimensional cargo will normally go very slowly. So, therefore, they get a more validity. They get more validity, more kilometers are covered for them. Like they are given, okay fine, they go slowly, so we take only accordingly the adjustment is done. Now pay attention. This was first 100 kilometers, now they have made it 200 kilometers. So if I have to go from one place to the other, which is only 50 kilometers away, the validity of the e-way bill will be 1 day. If I say I have to go to 300 kilometers, so it is greater than 200 kilometers. So then for every additional 200 kilometers or part thereof, additional day. So for every additional 200 kilometers or part thereof. So even if it is initially I want to shift from 250 kilometers. So I'll say 200 kilometers 1 day, and for the other part thereof also 1 more day you get. So even if I want to go from one place to the other, which is 250 kilometers, I get 2 days. If it is 300 kilometers, still I will get 2 days. But if it goes to 500 kilometers, then 1 day here, then for 1 day here, so 400 is done, and for that balance part again 1 day. So 3 days you will get. So accordingly you will do the calculation. Now if it is a multi-dimensional cargo which goes very slowly, so up to 20 kilometers 1 day they get. So in 1 day they have to cover 200 or 20 kilometers only, because they are very big, they go very slowly. And so where 200 is given, here it is 20. Clear till here? So now I will give you a random kilometers. You tell me that if it is in case 1, if it is shifting to 310 kilometers, how many days will be the validity of e-way bill? Validity of e-way bill. Put in the chat box. 300 kilometers, I want to know how many days the e-way bill will be valid. Into the chat box. How many days the e-way bill will be valid? Be active. Quickly answer. I'm reading in your comments. Okay. Very good. 2 days it will be done. If it is for 270 kilometers, then how many days? Then again still 2. If it is for 500 kilometers, 500 kilometers, then how many days? Simple line. Now I think you have understood the entire concept. 200 for 1 day for every 200 kilometers. So this would be 3 days. Finish. Extremely easy. Okay. Now we go to into some important parts also. Okay. That for the purpose, the relevant date means the date on which the e-way bill is generated, and the period of the validity shall be counted from the date on which the e-way bill was generated, and each day shall be counted as the expiring at the midnight of the day immediately coming next the day on which the e-way bill was generated. In simple words, that next day means what? If I have generated today, then next day, if it is generated on 5th, then 6th midnight, it is considered as 1 day. So e-way bill will be generated at 5 p.m. which will cover a distance of 90 kilometers. The e-way bill will be valid for 1 day. Now 1 day means from when you will start. That 1 day is what they are trying to say. When we say 1 day, so that 1 day you will start from when? So they are saying that it will be counted. Okay, the validity of the will be from 1 day. Means if the e-way bill is generated on 1st April at 5 p.m. Then for one day means what? Till next day. One day means till second they have to go, but second, when does it end? Midnight. So midnight of second day. Very simple, right? It is next day till night 12. Night 12 o'clock day ends is what they are trying to say. So if I have generated the e-way bill at today, what's the time now? At 1:30 I have generated the e-way bill. Will it end today tonight, or will it start from 24 hours or 12 hours? Will it start from now? Answer is no. Day calculation, next day midnight. So today whatever day is there, next day midnight is the day completion. Concept clear is what they're saying, because someone will say you generated now, from now 24 hours we will take. He said "No, don't do all this. Today we made, next day midnight. Okay, now communication of e-way bill and its acceptance. So e-way bill shall be communicated to the other party. So moment you've generated the e-way bill, the supplier will tell the recipient that I have dispatched the goods. And if no communication is received within 72 hours of the detail being available to him, it shall be regarded as deemed acceptance. Okay, communication of e-way bill and its acceptance. So, and if no communication is received within 72 hours of the details being made available to him, it is treated as a deemed acceptance. See, what are they trying to say? That listen, the details of the e-way bill shall be communicated to the other party for acceptance. I am going to give you the details of the e-way bill for acceptance. The driver or whoever will create the e-way bill and tell the other party. The other party has to respond within so much time. So if within 72 hours of the details being given to him, if he is not responding only, so we will assume that it is a deemed acceptance. Very simple. Now, very important, most important, which I feel if they ask on e-way bill, it will be on consignment value. Now, when we very easily said 50,000, but 50,000, does it include GST amount? Does it include taxable goods? Does it include non-taxable goods? So when I say 50,000 means what? So here they are saying 50,000 of consignment value. Definition of consignment value is very important. Pay attention. The value in accordance with section 15 declared in the invoice, bill of supply, delivery challan. So whatever is the value as declared in the invoice read with section 15, which talks about value, includes the GST amount. It includes GST amount. So if the goods are worth 45,000 and GST on it is 10,000, so 55,000 is there, it will be covered as it is exceeding 50,000, e-way bill has to be generated. So we have to include the GST amount for the purpose of your e-way bill, just to identify whether e-way bill has to be generated or no. Second, it excludes exempt goods. Concept clear? This is the most important. So what they will give you, they will tell you that there are goods, there is one consignment that is going, consignment, these goods are containing 1 lakh rupees exempt goods and 20,000 taxable goods, and GST on this is 2,000. Tell me one thing, is e-way bill required to be generated? Is e-way bill required to be generated, yes or no? So answer is no, because exempt goods are not to be counted and taxable good with GST. Okay, if this thing was also 20,000 and this was 30,000, okay, then we will so if this is something like this, 30,000, okay, and on this you have 100% GST. For example, let's say this is 40,000 and GST amount is 20,000. Tell me one thing, now GST is now it will be required, yes, because What is the consignment value? Consignment value will be this 40,000 plus the GST figure. So very simple. Now that you've noted it down, I think you'll be able to handle it. Okay. So that is it. We are done with GST. Important things also. Just if we see the form numbers. So first is GST bill is generated in e-way bill 1 or your EWB1. Your EWB2 is your consolidated e-way bill. That is, if a driver is taking multiple e-way bills, then he will file a consolidated e-way bill in which he will give e-way bill all the numbers that he is carrying. For example, if there is a particular vehicle which is taking consignments of 5 dealers, so and all of them are more than 50,000, so then he will take all his e-way bills, the driver, and he will create a consolidated e-way bill with all the detailed numbers. Then while going, if some officer stops him, detains him, so inspection is done. So that is in e-way bill 3, summary report will be made, and e-way bill 4 they will give the details of the vehicles which have been detained. Now e-way bill 3 and 4 is by the officer, GST officer. He stopped a car and he is telling which all car he plans to detain it. Okay, with this I think I have covered all the important elements of thing. Now you can even cancel the e-way bill. For example, incorrect details have been added within 24 hours of generation of e-way bill. This can be done, and all these rules. When e-way bill is not required, when it is not a motor vehicle, etc. And one thing is extension of e-way bill. Now extension of e-way bill is also allowed if there was a natural calamity, there was a delay, accident of the conveyance, you can extend the e-way bill. The validity of the e-way bill can be extended within 8 hours of its expiry. So moment is getting expired, within 8 hours you can extend the e-way bill as well. So we are done with the e-way bill, we are done with the sums. Now we will do with as on request someone said what is the debit and credit note to be done. So I will explain that also, debit and credit note. Okay, any other topics that you all want to know? I have almost covered the entire GST in depth. Okay, so everything is sorted, hardly anything has been left out. I'm just reading in your chats. Sir, debit note, credit note, please. Yes, so don't worry, I am there. You tell me what you want, I will cover it immediately. Don't have to worry. So someone has said debit note, credit note, I will cover it. Okay. So let's start. Now, section 34 talks about debit note and credit notes. Now, people don't know what is debit note, credit note, and the difference. I will give you some terms which will simplify the concept. Always remember that debit note can also be called as a supplementary invoice. Supplementary invoice. And credit note is nothing but you get a credit of the goods, so it's very good for you. And credit note is something which you have already dealt with. So let's take an example. Today when I go, and I think girls would know, when you girls go, they all search all the shops, then after that they buy a dress. After 2 days they will come back and they say, no, I don't like the dress, you keep the dress. Have you done that before? Boys, what happens, even if it is oversized, it is torn, they will continue wearing it. Okay, they don't care. Girls are very particular and very picky and choosy, okay, in general. So you must have noticed that you have gone to the shop again and saying, listen, I don't like the goods, you take the goods, give me a credit note. Sales return. Have you heard of sales return? Yes, we've heard of the concept of sales return. Here it is like a refund, but cash refund is not given. A credit has been given which you can utilize in future. Similarly, in business practice, it is also possible that I must have overcharged you. There must be a overcharged case scenario. So that time I say, oh, okay, I sorry, instead of 10,000, I charge you 1 lakh rupees and you paid also. So whatever is the difference amount, I will issue a credit note for it. So let's understand that, pay attention, that there were business partners. Now see, sales return you understood properly. Sales return, okay. Now you get the money back, you get the money and the GST amount has been given inside, which you can utilize in that credit can be utilized for next payment. Now let's say there are two business partners, business partner 1 and 2. This is second scenario I'm explaining. Now business partner 1 supplied goods or service to business partner 2. He raised the invoice also of 1 voice. So he raised the invoice of 1 lakh and 18% GST. Later he told that, oh sorry, I have Mr. B, your business partner, said that, listen, I later in my audit I came to know that you have overcharged me. The product is of only 50,000 rupees and on that GST should have been levied, but you charged me, or the product was only of 60,000, you have overcharged me. So the dealer will say, oh, I'm sorry, I figured out that I did a case of overcharging. So now what will be done? So in business partners, they will not give a refund of 40,000, etc. Because payment has been done of 1 lakh when he only had to do of 60,000. So now Mr. B has to give a credit note. So he will give a credit note of 40,000 plus GST to him, okay, against this transaction. So it will get nullified and Mr. B can use this credit note in his future purchases. Concept clear? Yes or no? Yes or no? So now let's read. Okay, now let's read. Where one or more of the invoices has been issued. So we have issued an invoice for supply of goods. Now we have charged either the value or the tax or both has exceeded, then what is payable? So we have charged more than what is actually payable, or there is a case of sales return, or the goods are found to be defective. So if the goods are defective, then again we come and we say, I have paid you 50,000 for these goods are not working, you keep the goods, or I am keeping the goods, give me discount of 30,000. So what are we doing? If the goods are defective, then why should I pay the full price? Give me a credit note of some amount. So then credit note, now pay attention, credit note may be issued by the supplier. So supplier issues a credit note to the customer or to the dealer where he has charged more than what is payable. Second scenario, business partner. Second, if the goods are returned back to me, then the credit, instead of giving refund, I will give them a credit note by use it somewhere in future. Third, if the goods I came to know were defective, then I will say, okay, fine, instead of 1 lakh, you pay 80,000, 20,000 credit note I will give you. Now, obviously, it has to be with the GST also. Okay, GST also approximately will be shown accordingly. Now, what line they are saying that, listen, the from here, now pay attention to that technical one small line is there. So there is one technical line which I want to explain. Now, what is happening is this I have refunded. Okay, the 40,000 has a credit has been given. So ideally, Mr. B would have a output liability of how much? If credit note was not issued, output liability would be of how much? Ideally, the first transaction was a 1 lakh. So output liability would have been of 1 lakh. But what is this dealer is saying? This Mr. B is saying that, listen, there was a understanding between us, and this liability will be reduced for me. Okay, because I have given a 40,000 credit, so I want to reduce my liability to 40,000 or to 60,000. Why? Because 40,000 credit I have given. Have you understood this? That initially I took 1 lakh. Initially I took 1 lakh, but now I have given a credit note, so my liability reduces. Yes, obviously, because now in net I got only 60,000 in my pocket because 40,000 refund I have given in the form of credit note. So they are saying that listen, whenever the liability is reducing, the government will be very careful because government's revenue get hit. Government revenue get hit, right? So why will we, whenever you're trying to reduce your liability, we wait for a confirmation from B1 and B2. So we ask the other party that did he really give you a credit note? Did he give you the credit note? Because he's claiming to reduce the liability, that he not got 1 lakh, he got only net 60,000. So here what they are saying is, pay attention. No reduction. Now they're talking in reverse. That no reduction of output tax liability of the supplier shall be permitted if the incidence of tax has actually been passed to any other person. Means what? Whatever is the taxes, whatever is the burden, he is borne it, he has not passed on the burden to anyone else. Okay, there is no cases of wrongdoing, then it will be allowed. So once the supplier issued a credit note, the supplier can reduce his liability only when the recipient has accepted it. So this is the first part. No reduction in liability shall be allowed if the incidence has been passed on. This means what? This 1 lakh we are allowing it to reduce it to 60,000. Okay, and the tax on that also we are allowing it to be reduced, as long as you have not transferred this liability on anyone else, or you have not collected any other tax from any other source, is what they are saying. So if you have actually got this much amount, you actually got net GST amount, then it is fine. Clear? Now coming to a concept of debit note. Now pay attention to debit note. Credit note, you understood sales return, it is there. In sales return, what happens that guys, liability ultimately reduces. A invoice is a reverse situation. It is called as supplementary invoice. A supplementary invoice. Supplementary means a additional invoice. I'll explain the concept, you'll understand it extremely well. Now B1 and B2. B1 supplied goods, they supplied certain goods or service of 1 lakh. Mr. B also paid 1 lakh. Later Mr. B said, the supplier realized that listen, the goods were actually worth 2 lakhs. So supplier collected less because he thought it was a 1 lakh, so he should have collected 2 lakh rupees. So 1 lakh bill has already been sent and we have collected 1 lakh. So we will issue a supplementary invoice, or debit note will be issued to Mr. B. Now debit note obviously is a burden on Mr. B, because he is saying that Mr. B has already paid one. When a debit note is issued by the supplier to the recipient, it is as though that you paid less, pay more now. So since they are business partners and it's a genuine mistake, the B2 might agree. So where invoices have been done and the amount or the tax charge is less than what is actually payable. So we have charged you less than what was payable. It was an error by our employee. So a debit note is issued if the tax or the value charged is less than what is actually payable. So you had to pay more. So we'll issue a debit note. If he accepts it, well and good, then he will pay the money. Okay. So with that, we have also covered the debit note and credit note concept. There is nothing more to it. Credit note comes in sales return, or when we have charged something more, then a credit note is issued. Clear? So that is it. We are done with the sums. We are done with all the sections also that we have done. And now I would request you all of you all, if sir, could you do registration limits for special in module? It is very confusing. Okay, let's see. So okay, so if you all are asking whatever difficulty you all have, now very important is about customs. On customs, before I go into anything, pay attention. Customs, in 2 hours I have completed full customs. On YouTube, you just search customs lecture CS executive. My video will come in the top first column. Okay, first page. Customs. Here you just do that. It is enough. I have covered from the module. And I have also covered the sums, and obviously customs has not amended from then at all. Okay, so major amendment had come, I had covered that. After that it has not been amended at all. You can refer it. It is, they had given dedicated marks of 10 marks to customs. Okay, but they are not asking customs of 10 marks, they are asking for 5 marks, but it is very scoring. And second, remember that what if they ask for 10 marks, then what you will do? So you cannot skip it. It's a very simple very simple thing. It won't, if my video lecture is of 2 hours, if you play it at 2x speed or 1.5x speed, you can finish it in 1.5 hours. Okay, with the sums, with the theory. Please do that. Do not skip anything for professional exams. You cannot risk that. You work so hard, so much studies you're doing, so much efforts you're putting, then why leave anything? Learn things in short manner is also fine. That is like a fast paced course, crash course. Go ahead and do it. Okay, don't skip it, please. Now someone said registration topic we will do. What is the limits? Now here, okay, so let's do the registration topic also. Anything else also you all need, please put in the chat box. Okay, now here we have said that the registration has to be done if you are exceeding 20 lakh rupees. If you read the entire part, you will come to know that service providers 20 lakh rupees. For northeastern states, it is 10 lakh rupees, special category states. Okay, and government had issued an exemption notification where for goods who exclusively supply goods, for them the limit has become 40 lakhs. So if I'm exclusively supplying goods, the registration limit is 40 lakhs. Okay, very simple. Now the registration limits. Here you can take a screenshot. I have summarized this beautifully here. Okay, now because what happens, some northeastern states, they have all different limits, etc. So here this is the entire summary. 20 lakhs normally, 40 lakhs normally for all special category states. I have put it across. So all Mizoram, Manipur, Nagaland, Tripura, it is 10 lakhs. For Uttarakhand, Assam, Meghalaya, Sikkim, Arunachal Pradesh, it is 20 lakhs. Himachal Pradesh, 40 lakhs. Jammu Kashmir, 40 lakhs. Pondicherry, Telangana, 20 lakhs. And rest of India, it is 40 lakhs. Finish. Limit is over. Okay, so it's nothing at all confusing. I have simplified it. For whole of India, 40 lakhs. We know that for exclusively in goods, it is there. Now 20 lakhs, you have to remember who all are there. 20 lakhs and 20 lakhs. So Pondicherry, Telangana, Uttarakhand, Assam, Meghalaya, Sikkim, Arunachal Pradesh, 20 lakhs. Then these two you will exit because it will Himachal Pradesh and Jammu Kashmir also in the normal case only, 40 lakhs. So you don't have to remember. Just remember Himachal Pradesh and Jammu Kashmir is normal, 40 lakhs. So only for these are 10 lakh rupees. Manipur, Mizoram, Nagaland, Tripura. That's it. So this is the entire registration limit. Now this was for supply of goods. Now when you see supply of service, Okay, this was for exclusively in supply. You can take a screenshot now. You want to take a screenshot? It's a really bad thing to do. Okay, so whatever, this is there. And the other for engage in supply of services. I know you're going to crop me in it, but still. So what is a supply of services? Supply of services. Then 10 and 20 unit will be there. So only remember that for Manipur, Mizoram, Nagaland, Tripura. Manipur, Mizoram, Nagaland, Tripura, it is 10 lakhs and 20 lakhs. See your 10 lakhs only, okay, whether it is for goods or it is for service, it is 10 lakhs only. Okay, rest all you can see. Then Uttarakhand and all of this category, they have 20 lakhs, and this is also 20 lakhs. So Uttarakhand, Assam, Meghalaya, Sikkim, Arunachal Pradesh, Himachal Pradesh. Okay, so Himachal Pradesh comes here. It is how much? 20 lakhs. So I don't think it is supposed to come into your exams. You don't have to sit and mug up like this. Okay, so that is it. I have completed the registration part also, the limits. Any other doubts, questions, whatever you have, you can ask me. Okay, any particular thing. Otherwise, we will take a leave. I am done with my entire GST completely. Okay, you will see that past papers are also solved. Everything I have done. All you have to do is join the dream batch, finish your balance part of the chapters also. So, sir, for DT, will ma'am cover the amendments in the dream batch? All amended videos are there. All as amendments were done, ma'am has taken. It is already there in the dream batch. But yes, ma'am, when she's doing the marathon, it will be with the amendments. So for practical MCQ, old syllabus, June and question paper is enough. I am asking for practicing, sir. Yes. So the last 1-2 attempt question papers you have to do. Anyhow, see, all the students have to remember that from last attempt and the previous attempt, 2 question papers, you have to solve it. In my, except for the MCQ and practical subjects, for all the theory subjects, I have already made the JT scanners with all the past exam questions chapter wise. So please study from that, you will get it. Okay, now without wasting any time of yours, because I know how important it is, I will take a leave. In a short span, I have covered enough, quite a lot of stuff. And you saw how simple it is. All I want you all is to like the video. If anyone who is not yet like the video, I want to give a shout out to your friends in your WhatsApp groups. Very important. Okay, can I get the new syllabus scanner, Sona? It is already there in the free study material section of our app. For both old syllabus scanners and new syllabus scanners, you have to go download our Jahangir tutorials app. In that free study material sections, I have put the entire details. Okay, Girija, nice to have you. Okay, great. Akshaya, Usha, nice. Okay, so enjoy the day, study hard, and make your parents, family and me proud. Take care guys. Bye. Monish, bye. Sona, bye.